Hi, very good afternoon, everybody. I hope you guys are doing well. I'd like to welcome you on my webinar. First of all, let me introduce myself. My name is Vicky Rai, and I'm a relationship officer in SmartFX. All right, so today I'm going to talk a really important topic about trading, and that is how to become a successful trader. Yeah, it's really significant. And however, this video can be a bit lengthy, but trust me, if you stick to the till the end, you'll have a very good information which can help you to enhance your trading career. All right. So let's get started. All right. So a brief overview of what trading is. This is for especially for people who just started. All right. So yes, as the trading involves buying and selling of financial instruments like stocks, commodities, bonds, and currencies with the goal of making a profit. All right. So okay. So learn the basics, understanding of different markets. We got different financial instruments, for example, stocks, Forex, commodities, cryptocurrencies. Let's move on. Okay, choose our trading strategy. Technical analysis versus fundamental analysis. So, okay. Examples of popular trading strategies. Importance of sticking to our strategy. All right, so we're gonna cover in detail about technical analysis versus fundamental analysis. We're gonna cover up talk about examples of popular trading strategies and importantly, the sticking to a strategy. All right. So as you so technical analysis and fundamental analysis, they are both very important. All right. Without which you cannot become a successful trader. You need to understand technical aspect of trading and fundamental aspect of trading as well. All right. So and examples of popular trading strategies. So there are tons of trading strategies available in the market, but I'd like to mention quite a few which actually used by majority of traders. For example, and breakout strategy, reversal strategy, and indicators like RSI, MACD, or candle pattern, example hammer or engulfing candles or double top or bottom. Or there's a strategy called supply and demand and also fair value gap trading. So basically what I do is I am a supply and demand trader. So I try to specialize on that. So, okay, so I'd like to talk about the sticking to the strategy, all right? See, you cannot become a good, let's say, consistent profitable trader if you are using all of the strategies. You can't. So in order to become a consistent profitable trader, you need to stick to your maximum two or one strategy. All right. And you need to specialize on that. For example, if you like, let's say, if you are trading in breakout or reversal, or let's say in indicators or a fair value gap or some supply and demand, and the end of the day, it's you will overtrade. So that means you will in the day will be like that. Like if you are winning today, tomorrow there will be your losses. So in order to maximize your profit and become a consistent profitable trader, you need to specialize in one trading strategy. All right. So that's very important. We're going to talk about this later, but let me proceed further. Okay. So actually, I was talking about technical analysis versus fundamental analysis. So I've just, like something interesting happened during the election day on uh, November 6th. You can see that the gold it's actually crashed on that day. Not literally crashed, but it went down by $97. So yes. So this is called fundamental. I mean, not just not only the election day, it happens on the NFP, it happens on um, CPI, it happens on, you know, um, PMI. So you gotta be really, really be careful, when you are trading, especially during the news hours. So if there any news, for example, if your position is opened, and if you like if there will be any news coming up, so you need it's advice from my side to close that down that um, the position which you have opened, all right, because there will be high volatility in the market and bigger players will be in the market. So you can see that the dollar actually went down by 97, sorry, gold went down by $97 in that day, November 6th, when Donald Trump was declared um, as the next president, 47th president of the United States of America. And vice versa, you can see the DXY, index went up. As you know that Donald Trump, in his political manifesto, he emphasized that if he get elected, if he becomes a president, he gonna impose tariff up to 60% to the Chinese goods. And Chinese and China, they are the second largest economy in the world, and especially with the US, they have huge they do have huge export and import business. Literally, like in 2023, around $488 billion of worth of imports took place. I mean, US imported from China. So now, the reason why dollar went up and gold went down or euro went down or on any of the currencies went down, because as once yeah, Donald Trump was got elected, then that means what happens is, yeah, he already declared that they're going to impose a tariff 60%. So any imported goods from China will be more expensive for the consumer, for the US. So literally the inflation will go up. So that's a reason why actually the dollar is going up. Okay, so let's talk about the creating a trading plan, setting trading goals, defining entry and exit points, and risk management rules. So I'd like to take you know I'd like to take a good time here explaining about this, because it's one of the significant topic for me and for any traders. So first of all, setting or trading goals. All right, this is really really important. So why this is not about setting making money, or I want to make this week $500,000, next week 1 million. No, that's not the case. We need to focus on the process first of all. What is your trading goals? It's like setting goals that, okay, yes, goal should be that I will be a very disciplined trader. I will only trade on my setup. All right. I will only trade in my strategy. I will not jump onto the guns, or that means I will not do impulsive trading. I will not overtrade. Okay. So I will stick to my risk management. So these are the goals you should actually have in your place. It's not on making money, because see, first of all, being the you know the duty or what okay duty or responsibility of a trader is to make a good trade. All right, to give the best to make a best trade. Money is secondary. So if the process is good itself, the result will be there. Don't worry about it. If you are waiting for your setup, if you are patient, if you are waiting for your setup, okay, and and the market comes to your setup and you open a trade, there will be a high probability of winning that trade. All right, so and also you need to understand, like, okay, my risk management, I have to follow, I have to be disciplined. So this is a trading goals. All right, so yes. So once you follow the process, the result will be there, definitely. You don't have to worry about, the outcome. The outcome will be, by default, it will be as expected. So make sure that uh, your trading goals should be like, like I want to be 1% better than yesterday, and I will never break my rules. Okay, defining entry and exit points. This is really, really important. All right. Um, See, first of all, um, as you know, in trading, like 90% people 90% people fail, and there are only 10% people they are successful. All right. And this is harsh truth. Yeah. Because every traders, they get into the, trading sector or in this industry to make it as a career. All right. They But unfortunately, end of the day, they lose, and not it's overwhelming number, 90%, and only the handful of people, like 10%, are successful. And there is a reason why. Because 90% of the people, they don't know why they are entering. They don't know where they will, what is how much, like what is when they want to exit. They have no idea. I mean, they see the impulsive candles, bearish or bullish, they enter. They have no idea why they entered. Just looking at the candles. That's the only reason they have, and they don't know when to exit. So so these are the things should be avoided. All right. First of all, you need to have a solid plan. All right. You should know three things if you really want to be successful. Why you are entering into the market. Why? There should be why factor. So if you understand why you're entering, because let's say I'm a supply and demand trader. So why am I entering? Because the market has come down to my setup, which is my demand or supply. And the probability of winning in for me is higher compared to the breakout or reversal or indicators. I don't use those strategy, but what I what I use is supply and demand, and that's why I've been back testing it, and majority of the time my trades are successful. So you should understand why you're entering, first of all, right? That's very, very important. And second thing is, what is your target? Like, what is your TP? How much is your, like, when you're when you want to exit the market, you should know that. You just enter the market and you don't know where to exit. That's terrible. So you should know that, okay, for example, for me, if I'm buying, I'm going long from a demand zone, I will always focus my TP on the supply zone, or let's say the previous swing high. All right. So there I will close, I'll get out of the market. So my TP my take profit will be either the supply zone or the previous swing high. So, but some of the people, they don't know where to take TP or take profit or exit. And also the third very important thing, and that is, if the market goes against you, where you will exit, where, like, what is your loss? Okay, so this is very important. So you need to understand before entering the market how much you're making and how much you're losing. So if you understand how much you're losing in the first place and how much you're making if the trade is successful, there will be no psychology, there will be no FOMO, there will be no, I'll talk about this later, but let me briefly explain. There will be no FOMO, there will be no greed, there will be no fear, because you already know how much you're losing when before entering the market, right? And that's very, very important, when to enter and exit, right? Okay, so I can talk about this very long, but I don't want to make this video webinar, long as. Okay, so let's move on to the next risk management rules. Okay, we'll cover this in the next. Okay, risk management, one of my favorite topic. Okay, I've come across with tons of traders who are very good um, in like trading, but because of the risk management, they always fail. Risk management is one of the crucial element of trading. It 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 it's like a, how do I say? Mm, it makes you in this profession for longer period of time. See, trading is not a sprint, it's a marathon. Okay, that okay, it's not about, you're not gonna end up like, okay, it's a one, not a 1 month or 2 months journey, it's lifelong journey. Okay, so in order, and the more you stick to this business, trading business, the more you will learn, the more you understand, the longer you will be in with this profession. So some of the people, they don't realize that, like they just, think, okay, it's a money making machine, like, or kind some sort of things, or they want to replicate other traders lifestyle, and they just enter the market without understanding why, and just don't even put a stop loss. They don't know, what, how much, like, position size they have to open. So at the end of the day, blow off their account, and they blame that, oh, this is gambling. But it is not. It's absolutely a profession. It's a business. So risk management will keep you in this big business for longer period of time, and the more longer you be in this market, the more there is a high chances of winning. All right. So setting a stop loss order. This is wonderful. I mean, what, thing for me. Okay, stop loss order, people like 90% of the, um traders who lose, they don't put stop loss. They think, okay, the market will come down, they'll take the stop loss and it will reverse. So they try once, but in second time they don't. Okay, so see, there is a place where you should put a stop loss as well. You can't randomly put in the middle of the, market. If, for example, if I'm entering from a demand zone, so I put my stop loss below the demand zone. And what will happen is, um, if you do that, you will get good risk to reward ratio as well. I'll talk about that later. But stop loss will minimize your losses and maximize your profit. Okay, it might hit one time, but second, but if got, let's say, market is, for example, let's say you put a stop loss just below support or resistance. For the beginners, they just use support and resistance, so I'm going to talk about support and resistance. So let's say you are buying from the support, and you put a stop loss just below that, and the market makers, they know where the the SL is, so they come and take your SL, and take your uh, market to the direction in which you have bought. So in that scenario, you will be, you feel like, oh, because of this SL, uh, I lose my money. If I wouldn't have put SL, then market would have come down and went to my direction. But they don't realize the next time, if the market intent, not intention, these are the market makers, but sometimes market do comes down because of the news, because of any first, like, countries bad, GDP or any other thing. So with SL, let's say they lost 10, but if they don't put SL, they could lose like around in more than what they actually can afford to lose. It's $100. So it's easy to recover that $10 which they lost in SL, but it's very difficult to recover those $100 which he has lost while not putting SL. Okay, so the second one is limiting capital risk per day trade. Okay, so this is also very, very important. You should know that how much you want to risk in that per position. Okay, like everyone, like every biggest like professional traders, they're willing to lose 1% or 2% in per trade. So it depends on your capital, how much you have, and tried. And for me, like, if you are just getting started, if you are just a beginner, I would recommend not to lose more than 1%. or 0.5%. Because you're in a learning phase. You're not here to make money, as soon as you start learning. That's not gonna happen. You're gonna not gonna make money, uh, you know, up to 8 months or 9 months. I'm sorry to disappoint you. This is the reality of trading because it's a business. It's a skill. I mean, if you don't understand this skill, if you don't understand business, how can you make money, right? So you learn and you can make money. So try to risk about half of like 0.50% or 1% per trade. So that would be, like, and for a professional trader or for a trader who are trading, so you have to think in this way. Okay, risking per trade is like 2% max. But you also should know that, trading is like let's say driving a car in a highway and driving a car in a city in a crowded area. So, for example, if you are in a highway, you will never drive slow, right? You always have to drive very fast because there is a uh, certain speed limit that you 100 km per hour or 80 km, but you can't just slow down there. For example, on contrary, if you're driving in a city with in a crowded place, you can't drive your car fast. You have to slow down there because there are signals. So trading in a similar way, if you think you have good setup, if you are confident about your strategy, you can actually increase your lot size. All right, you can risk bit more because you already know that you already have back tested. Okay, you have already got results, so you can actually risk little more. However, if in contrary, if you like you are you the you are let's say you want to enter into the market, but you're a bit reluctant, okay, but still you have instinct feeling that okay, this trade might go in my direction. So, decrease the lot, decrease the position size, decrease the risk, so that if the market goes to your direction, well, that's fantastic. If doesn't goes, then you lose little. So same way, driving a car and trading are similar. If you're more confident, if you already have, like made money before with that setup, yes, go ahead. You can increase a lot, but not more than 2% or less. But if you are not confident, just below 2%, that would I recommend. But it's up to you for the professional trader or people trading on, but this is what I do actually. Diversifying your portfolio is very, very important. Like you can, if you're trading commodities, try to have currencies as well in your portfolio, stocks, because if one will not work, then other will work. So that's the diversifying. All right. Let's move on to the next, back test and practice. Well, okay, this is also very, very important. Importance of back testing your strategy, using demo accounts to practice learning from the past trades. Okay, yes, this is very important as well, but it's very boring for some people, like some traders. They don't want to back. They just want to enter into the market, make money, be happy, and come out. But they don't want to, back test, or they don't want to practice. So this is, see, as I told you, 90%, 10%, right? 90% failure, 10% success. Because 90% they don't do this. They are- they never they're not convinced with the concept of back testing, okay, or learning from the trades. But professional trader, it's yeah, I know it's a bit what to say. It's not that entertaining to back test or everything, right? It's not thrilling, but the professional trader who are successful, they know the importance of back testing. You can back test in your demo account, see whether that setup you have, whether you are supply and demand trader, fair value gap trader, or reversal traders, or chart pattern traders, or indicators traders, or breakout traders. Back test that. test in a demo account, see what is the uh, how much is the probability of winning in that trade. So it's like, if you back test in, what will happen is same like, if you practice in a ground to play football or cricket, and when you actually play the real match, you will perform better, right? But if you go to real match and try to play a game, you will be, joke. You will be in a terrible, terrible situation. So similarly, the back testing also, if you back test your setup, if you back test your strategy, you will be much more familiar with that. And when you actually trade in a real account, then you will have confidence that, okay, I have back tested the strategy and it worked, and it should work here as well. So that's the importance of back testing and learning from the past trades. It's really, really important. Yeah. Let's move on to the next. Yeah. Okay. Very, very important. So keeping or trading journal. See, first of all, I assume like a lot of traders, I mean, everyone, most like everyone who is very much, very much interested to make it as a trading career. Okay. I know most of them you know, might have access to the information which I'm sharing right now. Okay, they might know everything, but the thing is, they never implement. That's a problem. Despite of knowing that, okay, I should do this, I should do that, but they never implement. All right. So what I would suggest, or what I would have advised you, whatever I'm actually uh, giving you or teaching you right now, try to implement that, and trust me, it will work like wonders. Keeping a trading journal, wonderful things. Documenting trades and regions, analyzing outcomes, continuous improvement. So if you like ask any biggest traders in the world, they do this. They keep journaling. They have this thing because, see, we are in an age of technology, of huge technology. There's so much information available in the market with the tap of your finger. All right. And we cannot keep everything in our in our mind. Okay. So when you like journal, what you are doing is you are actually recording the experiences which you had while you open your trade, whether it's a loss or win. All right, doesn't matter whether you're winning or losing, but you are actually putting that information there in that piece of paper, that why you today, why you made a profit and why you lost. And once you got down those things, it's really it's like, what to say, it's a bible for you. It's a, it's everything for you, because the next day when you actually go ahead and try to open the similar position, so you can actually refer that trading journal. So if you have made a, like profit, or if your trade was successful, okay, so you already know, you have already got down that, okay, why it went successful. But in case you have, like made a mistake in that trade and you lost, and you have written that you will never enter into that trade again, and that will save your money and time and your confidence also. See, if you are losing in trading, you're not only losing money and time, you're losing your confidence also. You're losing your winning attitude, because winning attitude is very, very important in trading. See, it matters. I'm not saying that every time you have to win. No, it's not like that. But the confidence which we have after we win, it motivates you to do more and more. Okay, that's that's very important. And so just keep that momentum. If you are, like, if you are, let's say, That's how you become successful. I mean, like if you have winning attitude, winning like confidence in you in your trading, that's how. But if you look like because of silly mistakes, okay, because of things which you could have avoided doing, and because of that you lost, that means you're not losing the money on time, you're losing confidence. That means you are not increasing, you're not going to become successful. So that's the reason documenting trades and reasons very important. Analyzing the outcomes, what happened, continuous improvement. How can I improve with that? Okay, once you get when you write down whatever mistakes you have made in that piece of paper, try to figure out what you could have done in that trading, where you could have put a stop loss, or where you could have put like your TP, or what position size you would have taken. Okay, so you that's how you can improve in trading. All right, let's move to the next. Stay informed. Keeping up with the market news and trends, continuous learning and adaptation. Very important. See, news and trends. So, see, for us being big, trader or investor, we have to be in touch of what is happening as of now in the market, because by reading news, all right, watching news, all the trends. Because see, for example, if you like, most of the hedge funds, banks, they have the information available quicker than any other retail traders. Okay, they have this what to say, this facility. So this is the reason they act much more quicker than us, because they are in, they need they have access to the latest news, latest trends. So that's the reason they are successful. And yeah, I'm not saying that like you know you if you are like, you will fall, I mean, you will not be successful if you don't get access to the news immediately. No, because but for me, like, keep reading the news every time. If you have a spare time, keep read the news, because there you can learn what's happening around the world. All right, if you're a currency trader, so you can read the news and you can find out, okay, this country is doing this country is doing, or commodities like gold, everything. So it's very, very important to have all those knowledge, so that uh, it can help you to trade better. All right, if you're good in technical, but something goes wrong in the world, and with that news, technical analysis can not I mean, technical analysis cannot work. So yes, and continuous learning and adaptation. Yeah, those things. So all right, okay, this is something everyone I know. I mean, like everyone heard about this, controlling your emotions, trading psychology, the importance of emotional discipline, strategies to manage stress and avoid impulsive decisions. Wow, this is one of my favorites element of trading. See, if like every traders or investor, they have different perspective in regards to trading. Some of them says technical analysis is significant. Some of them say fundamental is very, very important. And some of them says trading psychology, emotions is controlling emotion in trading is important. They have different perspective. But for me, all of these three is very, very, very important. Without each other, we can't be a successful trader. If you're good in technical or fundamental and very bad in trading psychology or in emotions, very weak in emotions, you cannot be successful. Even though you're a good analyst, you can predict the market. Okay, you can understand any country's economy's health. Doesn't matter if it's not gonna work out if you don't have control your emotions. All right. The trading eh, in trading psychology is very, very important. Like understanding your fear, your FOMO, your greed, right? Because see, for example, I'll give you a very, very good example, all right? Let's say you did an analysis about gold, and you also checked like in news that gold news is in favor of gold. Okay, so you did an analysis of gold and uh, technical analysis of gold and also the fundamental. So you now you know that you have to enter into the market and buy the gold. Okay, so what you did from let's say 2700, you bought a gold. Okay, I'm just giving you an example. And 2700, you bought a gold from like demand zone, and you know that it can go up to 2700 and let's say 50. Okay, so you entered the market. Now the market is going to your direction. Very well. You already have, let's say, um, it already 2700, it already reached 2010, 2710. Let's say you open a 0.01. I'm just giving you an example, all right? So that you already made a profit of $10. Okay. However, now it's going up again, but now you have that fear in your mind, in your heart that hey, I already made around $11, $12. What if the market comes down and wipes out my profit? Okay. So you have that fear, and suddenly you get out of that trade, taking profit of $10. Okay. But once you out of that trade with that profit of $10 and the market goes up and goes to your like direction and reaches up to 2750, so you could have made $50. Okay, but with $10 you close the trade just because of your fear, so you missed out on another $40. I'm just giving you, there's a minimum. If you like trading with lot, imagine how much you have lost. All right, so now your technical was good, your fundamental was good, but your trading psychology was not good because you had that fear that market can come reverse and take away your $10 of profit. That's why you quit there. But unfor- unfortunately, fortunately, it went up to 5750 as you expected, as your technical and analysis have, I mean, has indicated you. So because of that fear, you lost $40, not because of technical analysis or fundamental analysis. This is important. Okay. So all of this thing should be, you should know when to get out of the trade. But there's a very, very like, I have experienced this in my lifetime. Even I was, uh, when I was started trading, I experienced this thing. We have tendency that if we are making profit, we want to just book a small profit and get out of that trade, so that we can save that small profit. But if we are losing, for example, if you're losing $10, we wait the market to reverse. Okay, we lose $20. We are very hopeful now that market will reverse. Then we lose $40. Then oh, I've already lost this $40. What is the use now? Uh, Let it be. If the market comes, it will recover. Then in the process, some of them lose their account, or some of them lose their huge amount of money. Let's say $100. I'm just giving you a small uh, number just to be relevant with the with the beginners and all. So $100. But the things are different for a professional trader or successful trader. What they do is um, they if they see that their analysis is good and the market has come to their setup, their strategy, and if they are winning, they let the market to go. They will not close that small position. They let the market go. They want to take as much profit as they can until it reaches to the, let's say you're buying from demand zone and which is supply zone, they will close it, or maybe just previous swing high, they will close it. Well, they will not book that tiny profit because of fear. Okay. They might buy also in between that, or they might trail the SL up, but at least let the trading go. They will never close that trade until their TP is hit. Okay. However, in contrary, if this a professional trader, if they see that they are losing money, for example, if they're losing $10, they will quickly get out of that trade. They already know that their decision is wrong. And that's the reason the market went against them. So they quickly cut the losses. So now, instead of like other, unsuccessful trader was losing $100, they lose only $10. For the next time when they trade, it's very easy for them to recover that $10. Even though they make $20, the $10 will be recovered and $10 will be profit. But the people who are unsuccessful in trading, who are beginners like that, who have lost $100, it's very difficult for them to recover that $100. In order to recover that $100, they have to take a bigger risk. And as a result, if the market goes against them, they will lose another 200 or $500. And that's what exactly happens. So we should not be hopeful in trading. Trust me, hope is a beautiful word. It's a good word for other aspect of life, not for trading. In general, let's say if you're working somewhere else, or if you want to become somebody, if you want to become a runner, if you want to become a businessman, okay, hope is very good. But in trading, it's very bad hope. You can't hope that market will go up or down. You can't hope the market will recover, I mean reverse and recover your money. If you hope, then that means you are biggest loser. So never hope in trading. Okay. So this thing, trading psychology, is very important. I mean, see, I understand that it's not easy to be disciplined overnight. It's not easy to control our emotions, which we already have, like fear, greed, FOMO. All right. It's not easy, but with practice, you can actually can accomplish anything. So you need to practice to become disciplined. You have to practice to control your fear. Let if you have done your homework, if you have done your analysis, and if you think this trade can work for you, and if the market is going in your direction, and if you see profit, let the market go to its direction. Do not close the profit. If you are hesitant, and initially you will be like, still you will have that fear factor, because you are training your mind not to be fearful, but still you'll have. In that scenario, trail your stop loss, put above, just take a portion, put above your entry point, or make a break, even put in a break even. Okay. So you can train your mind, trust me. You can train your fear, you can train your greed, you can train your FOMO. And greed is also similar thing. For example, if you do not book your TP, let's say you opened a position and it went to your direction, you already have $100 profit. but and you see that there's a previous swing high, or let's say, or supply zone there, or resistance area. You're supposed to take profit from there, but you are greedy now. You think that, oh, the market can go above 100. Then you do not close your position. What happens? The market goes up, hit that supply or resistance area, or swing previous swing high, and comes down and take away your profits, and hit your SL also. So that's a great. So you have to train your mind to control your fear, greed, FOMO, everything. But as I told you earlier, if you know why you're entering the market, how much you're losing, and how much you're making in that trade, you will not have all of these three things like FOMO, fear of missing out, or greed, or fear, because you already know that if the market goes against me, I'm losing this much. I have I have a capacity to lose this much. That if I lose this much, let's say you lose $10 or $100, it doesn't impact my capital. I can lose that. So there is no fear when you enter, and you already know that, okay, I'm gonna take TP. My take profit will be in previous swing high, or in that resistance, or supply zone, or demand zone. So you already know that, okay, if they reach that, I'm gonna take 200 of my profit. 1:2 risk to reward, or 1:3, let's say 300. So already have in my mind, okay, I'm making 300. So you will not have greed. And let's not talk about the FOMO, fear of missing out, because you are not, jumping on the grounds. You're jumping on the gun, or jump. You're not doing impulsive trading or random trading. You are there for a reason. So always have this thing in your mind, why you're entering the market, how much you're going to lose if something the trade goes against you, and how much you're going to make if the trade goes in your direction. So if with this three, if you enter the market, you can become a very, very successful trader. Okay. Okay, using technology, trading platforms, tools, back testing tools. Yes, I already mentioned that. There are a lot of trading platforms uh, like trading view and all. um, like you can open a demo accounts. So back testing is very, very important. Okay, seek mentorship and community, engaging with other traders, joining trading communities, learning from experienced traders. So this is also a very, very important. See, trading is it's not a, like, let's say, um, it's not a game, or a small game, or it's a big ocean. Okay, it's the market itself evolves. So engaging with other traders will give you that insight, will give you that information, what's happening in the market. Or sometimes your strategy, if doesn't work, then somebody might give you a suggestion to actually, okay, supply demand is not working, then let's you can do a fair value gap trading, or you can do, let's say, breakout, or you can do a reversal, or you can do a chart pattern, whatever. um, so they can give you so sharing information is very important with the amongst the traders, joining the trading communities, so you can actually learn a lot from that. Because in trading, it's the knowledge is, you should always constantly learn. You should never stop learning. The day you stop learning, that means you are deciding yourself to quit in that industry. So you have to constantly keep learning. All right. This is very, very essential to become a successful trader. So learning from the experienced traders. And and for me, learning, theory is not enough. You have to practice that thing. What others are telling you, just back test that. Okay, just if I'm okay, I told you, like many things today. you can actually check, try to backtest what I'm saying, and trust me, it will give you a immense what to say result. All right. So I'd like to wrap up my webinar here and really appreciate it. Everyone, especially I can see Farhan is here. Farhan, thank you very much. And all the people,
Welcome, sir. Welcome.
you can watch uh, my webinar in YouTube. All right. And in case you guys need a one-on-one sessions, feel free to contact me. And yes, so if you have any questions, you let me know. So appreciate it, Farhan.
Thank you, sir.
Do you have any questions, Farhan, so far?
Actually, sir,
You can type
I'm
it
not.
down if you have any questions.
You're able to hear me?
Write it in the comments. Uh, okay, let me check. Which news to use? Like means I actually didn't understand which news you're talking about. You were talking about Forex Factory or what kind of news? Ah, what news? Okay. See, first of all, there are many so for me, I use yeah, Bloomberg. You can use investing.com. You can use Fastbull. You can use FX Street. I use three. I use investing.com, Fastbull, and FX Street. These three. So yeah, be in touch. I mean, always refer this news all the time because it's gonna be really helpful. Yeah. All right. Okay. With this, I would like to end this webinar and thank you very much once again. Really appreciate it, and I'll see you in the next webinar. Have a wonderful day ahead. Take care all. Bye bye.